Benito Vergatini.
Smile 90.4 FM.
Do remember you're welcome to be a part of the conversation. 0829904904. You may want to reflect on the news of the passing of Dr. Sibongile Khumalo. This in the wake of another South African music icon who also passed away recently, Jonas Gwangwa. SMSs at 35904. Now, as the impact of the COVID-19 pandemic continues to ripple through 2021 and our country certainly faces economic contraction and high levels of business risk, there are some positive signs that suggest that businesses should be playing it safe for now while keeping an eye on the long game. Guest lecturer at the University of Stellenbosch Business School, Jason Hamilton, joins us in conversation. Jason, good evening. Thank you so much for your time.
Good evening, and thank you for having me.
It's a pleasure, Jason. Thank you. Whilst COVID-19 continues to have a devastating impact on our economy and heightened risk, do you think, in fact, that there are positive signs that businesses can use to navigate their way for a long-term recovery?
I think there is, and I think it's also prudent to also just be very realistic about what we are actually facing. And I know 2020 we're all trying to put behind us, but as we see, we are still very much dealing with the health crisis, and in so doing also dealing with the financial difficulties that it now presents at company level, at personal level, and obviously at government level as well. So I think with that context, we still need to be very careful what we do this year, because although we are predicting growth, and the world is saying we're emerging now, we're starting a recovery, and obviously as the world recovers, South Africa will also benefit from that. I think it's still important to understand that we are still dealing with very, very difficult trading environments, and if anything happens to stunt growth abroad, this will have a devastating impact on South Africa as well. So one of the things I think, not to be negative with the positive statement, is that although things are starting to look a bit better, we need to be very careful about what we plan for. So I think from a company point of view and from an individual point of view as well, don't necessarily plan for growth. So run your scenarios, look at your contingency plans based on very similar years to last year, and any growth we then do see will obviously a big benefit for that. I think also if we look forward, if we take a recovery path, South Africa is probably on a 5 to 7 year recovery path really to get us back to where we were in 2019.
Wow.
And I think that's important to sort of keep in mind as well.
I suppose that also explains why, in one sense, Jason, that long-term optimism is tempered, because the recovery is going to take some time.
The recovery is definitely going to take time, and I think that even if we recover in the 5 years, in sort of 5 years' time back to 2019 levels, from a per capita GDP point of view, we're actually still behind, because we would have had population growth by then. So that figure is very key to note, and the impact of that is also important. So again, we're growing from a very low base, and there is still a lot of things we need to deal with. And yes, confidence is building, because we are seeing vaccines being rolled out internationally. We are getting our first batch very, very soon. But I think even from a vaccine point of view, that's definitely a 2021 and probably 2022 project. So only once everybody's really been vaccinated and we've got some level of herd immunity on a global scale will real confidence actually return. And I think on the positive side of that is that we do have some pent-up spending power within the economy that's been built up, and we've seen that sort of play out internationally as well. So I think once confidence returns, there will be further stimulus seen within the economy from a spending point of view.
And one just hopes as well, Jason, that the vaccine program, the various phases that have been announced, not just here in South Africa, because as you pointed out, there's got to be, I suppose, global herd immunity in one sense to restore that confidence. So while it's still being rolled out, there's still some hesitancy around potential short-term growth. I mean, what impact are we looking at here?
I think the interesting fact for me, if you start looking at numbers, is that I know we South Africa contracted probably one of the worst from a global economy perspective, sort of saw a contraction of about 6%. If you look at the global average, it's kind of 4%. So we've got a very volatile relationship with positive and negative growth. And I think also now, if we look at growth this year, sort of anything between 2 and 3% is sort of projected by the various institutions. And if we look at next year, it's slightly lower. So I think, if the world economy is rebounding, you've got emerging economies in general. Our partners in Africa, North Africa, projected to grow at 5 to 7%. Us sitting at somewhere between 2 and 3 says something about our local issues we need to deal with. The point is, however, we're still sitting with at least growth, and there is sort of green shoots being shown from a China perspective, and obviously from a UK, from a Asia, and then from a European point of view as well. But we need those economies to fire. I think also on the positive side, from the African continent point of view, and obviously for us too, is that from a commodity price point of view, which is a large driver of many of the economies, there's at least stability and demand. So I think that will probably continue for a while, which at least provides some base for our economies to sort of grow into.
Certainly a very circumspect picture that you are painting there, and quite understandable given the challenges we face both locally and globally. And in terms of, if we look at our various sectors that have been impacted, not just by the economic downturn, but by the response to that in terms of the various lockdowns. There certainly have been cries from the tourism sector, from hospitality. How do those businesses and their respective investors apply their strategies to look ahead long term, if they are able to do so?
I think for me, if I look at, and I think again a word of caution, is that if we went into 2020, we could have assumed that travel and leisure would have, and hospitality would have been impacted. I think what I didn't see coming, at least, was that there would be a cigarette ban and an alcohol ban, especially now also with the alcohol ban being extended. So I think for me, again, if we go forward as well, we're not sure what's actually going to happen if we've got a second wave now, but what about third or fourth waves? So I think for me, travel and leisure, etc., will still be severely under pressure, and the fallout will be detrimental. And I think many businesses will not be able to actually rebuild. I think on the other side, we've got this duality in the economy forming, where a lot of sectors are actually doing extremely well. So we obviously know food and retail, especially around the essential services, has maintained very strongly. We saw technology and obviously pharmaceuticals also maintaining. So from a positive point of view, I think going forward as well, there's going to be a renewed focus and remained focus on that. Plus, we've got agriculture, we've got energy, we've got renewables and infrastructure, which are huge areas of focus from an investment point of view, locally, but also from international investors. So I think if there's a light at the end of the tunnel, that's something we need to focus on.
Yeah, absolutely. Lastly then, Jason, on a practical level, what is the reality then for businesses operating within this climate that you described in terms of budgeting for the year ahead?
I think it again comes down to, even if the outlook is positive for a particular business, I think it's still batting down the hatches and actually looking at making sure you run your scenario plans and your contingencies very, very clearly. Make sure you have very, very tight controls or interventions kind of on a weekly basis by planning to make sure you're on top of any issues that do arise, because I think we are still dealing with a very volatile environment. So really plan for that zero growth taking place. Just to err on the cautious side. Debt levels are extremely high because a lot of companies have used their debt levels or surplus cash to survive. So very, very sensitive to any knocks going forward. But I think on that front too, it's a question of act early by saying what further debt could I raise or leverage can I raise, either through banks or privately or then through the markets. And then same with equity, to say, well, if I need an equity partner, this is something I need to start engaging with early to have it in the contingency plan.
Jason Hamilton, guest lecturer at the University of Stellenbosch Business School. Jason, we'll leave it there. Appreciate your time. Thank you so much for joining us this evening.
Thank you so much. Appreciate it.